Good morning, this is Ron Brown. It's Saturday morning, the 30th of January, and it's been an interesting month to say the least. I'm going to do some market analysis here for you. You can see that I'm in HGSI investment software, and I'm going to try to keep this short. So let's just get started. I'm going to go into my user groups, into my market analysis user groups folder. I'll begin in 01 Major Markets Plus. I'll click through to the warehouse, bring this up here, bring up my quick pick and show you that I'm in my top folder, top down process for market analysis, Major Markets Plus. I call it Major Markets Plus because it consists of both indexes and ETFs, just to get a well-rounded feel for what the market's doing. I'm sorted on the raw combo, which is a percentage price change one day. You can see that the volume was very high, the spread was wide, and the close was high. Compare that to these other indexes and ETFs, and most of them were down or closed down for the day. And you can see the percentage price change on the 1 day and the 5 day. And there was some real damage done yesterday. Now, in the past, I mentioned keeping an eye on some of these ARK funds because they have done so well since the March bottom, and if they roll over, that's a pretty good sign that the market is rolling over too. And here's also a couple of IBD funds that you should be taking a look at. You can see that this one's down 6.6% over 5 days. And the IBD 50 is down 6.7%. So there has been some damage there. VIX, of course, you would expect to be up. Now the natural gas fund remains near the bottom, which is kind of surprising because there's an Arctic front dipping down into the northeast, I believe, upper Midwest and northeast, and I guess the assumption is it's not going to last long, so there's really not a demand on natural gas. Anyway, looking over here, you can look down these two columns. Here's down from the 52-week high and down from the 52-week low. So I'm going to just go, let's locate the Nasdaq here, if I can find it right here. You can see it's down 4.8% from the 52-week high, but still up 97.1% from the 52-week low. Let's begin the analysis there. I'll double click on this, bring this to the front, and I want to go into my market charts. This is at Nasdaq with internals. Make this full screen, and you can see that there's been a lot of volume activity the past few days. The crosshair shows the gap down, or it leads me up to the gap down with an effort to fall, BPA flag, and then yesterday you can see that this is a pseudo up thrust, a sign of weakness. Advancing versus declining stocks has turned negative. It bounced down here. On this day, they were about even, but then the decliners clearly outnumbered the advancers. Advancing declining volume, pretty even here, and the new highs versus new lows has dropped substantially. If I drop down to the next chart, you can see that the new highs have fallen off sharply over the past several days. They were strong up into this area here on this gap up, but they've reversed. So that's not looking very good. I'm going to quickly look at Ian's multiple indicator chart, and you can see that the Bongo Daily and the force indexes have turned red, and I'm seeing yellow here too. This histogram represents a 13-day force, and you can see the force moving down here. The indicator was very, very sharp to the downside. Okay, so the Nasdaq's not looking all that great. I'll put this back here, and rather than spending more time looking at this, I'm going to move on. Let's go back to the warehouse view, the ultra short VIX. I'll bring this up and I'll scroll down to a chart that I use a lot, and you can see that the VIX has been rising. This is just the opposite signal we got on the Nasdaq. This is an effort to rise, and the VIX continues to rise, or this is the UVXY, not the VIX. And as fear comes into the market and for downside protection, traders will jump into that. The Bitcoin investment trust that I added last week, Bitcoin was up sharply yesterday, but it must have fallen off because there was a gap up here, and then this closed in the lower end of its range. All right, I want to move on here. I'm going to go to the major market ETFs. I will slip down into the second folder, ETFs, end of day, and you can see it's a similar situation here, just using ETFs. A lot of red, seeing strong deterioration in these ETFs on heavier volume. Spider ETFs expanded. I just added all the S&P ETFs into this one folder, and you can see that it's blood red. So be careful. Over here on the VPA signal conditions, a lot of efforts to fall. It's just looking at these scorecards, you can see the damage that has been done over the past few days. Going to take a look at one more folder here. The spiders, these are the XLU, V, and so on, and you can see that they were all down yesterday, and lots of efforts to fall here. So clearly a dangerous market right now. Okay, next I want to move back up to my broad market indices, and I'll open this quick pickup, and I'm going to go down here for the HGSI indexes. These are HGSI. These are generated by HGS Investor. I use market cap weighting, and you can see that the VPA close on all of these, with the exception of the utilities, was down, volume was high, the spread was wide. So pretty widespread selling. Now these percentage numbers are based upon the indexes, not the and the indexes generated by HGSI, not the major market indexes. So just make sure you're aware of that. You can see what has happened. These all closed in the lower portion of their range. They were all negative, and volume was up on all of these. If you look over here, it's I should spread these out a little bit, advancing versus declining stocks, and advancing versus declining volume. You can see that if I sort on this, let's see, anything below 10 is a 10 to 1 day, and just extremely negative. This would be a 8.5 to 1 down day, and so on. The utilities are the only, it's the only index above 0.50, so very, very weak. Now if I drop down to industries, I'm sorted on the percentage price change. Well, let's do this. I'm going to drop down to number 3. This sorts on advancing issues versus declining issues, and nothing towards the top indicates that the groups that were leading were not hit hard. Here's the e-commerce, which was 8 to 18, so not terrible. This view sorts on advancing issues divided by declining issues, and if I go back up to the view at the top, this sorts on the percentage price change 1 day. And we did have a few indexes that were up for the day. Material handling, specialty retail, jewelry and watch, life science, biotech was actually up. Paper, marine shipping. So down to this point, these were up for the day based upon a percentage basis. And you can look over at these columns over here and look at the advancing issues versus the declining issues. A lot of these groups don't have many stocks in them, but it looks like life science equipment was split evenly, 18 to 18. Let's take a quick look at the bottom. I'll just sort on this and go down to the bottom. Another way I can do this is just sort through all combo down and then come back up, and you can see steel producers got hit hard. This is on the percentage price change. One day down 6%, cruise lines down 5.8, chemicals down 5.7, and so on. You can do all this on your own. Okay, so the next thing I want to do is I'm going to go back up here to my broad market indices, and I want to take a look at some charts, and I'm going to begin with the S&P 1500, and the charts that I use are under my HGSI index charts. I usually use these two charts. Let me bring another chart up here. And I'm going to make this I'll go up to my HCSI index charts, make it number 5. And this can give us some really good insight as to what's going on. This is the S&P 1500 index. You can see that on this chart, which I've explained before, that if it's a 5-to-1 down day for advancers versus decliners and advancing volume versus declining volume, these two are going to be bright red. The force index 13, the force index 2, which is today's close minus yesterday's close times today's volume. These turned red. The volume point of control turned red. So a red bar is generated. Looking at the moving averages, the 3 went down through the 6. It looks like this index found a little bit of support here at the 50-day moving average. But these indicators show the selling pressure, and it's on a sell right now. These don't always work, as is the case with any indicator, but more often than not they do. You can see all these buy signals on the way up, and now we're getting a sell signal. I'm going to minimize this. I'm going to maximize this one, and you can see the percentage price change. I'm sorry, the percent above the 20-day moving average, the 30-day moving average, the 50-day moving average, and the 200-day. These three, the percentage of stocks in the S&P 1500 that are above these moving averages, they all tanked. So be very careful. This shows how much damage has been done. Now let's do another index. Let's do. I'm going to bring this up. And I'm going to sort on this to make it easier to find. I'm going to look at the institutional index. All stocks institutional. These are indexes that I put together which show they have at least a 50% institutional sponsorship. And you can see getting the same signal on this. So this tells me that institutional money is flowing out. We're getting the same look here. You can see how this dived, and I'm going to put a crosshair on here. These all crossed on the same day, so a big sell-off. Actually, they were crossing the day before this gap down. That's interesting. Okay, so there was strong deterioration on this day, and here's that gap down that we saw in the Nasdaq. So there was plenty of selling going on before. So this is why you should check these every day if you're an HGSI user. Now I wanted to limit this to 15 minutes. It's 14:40. I'm going to stop it right here. I just wanted to give you a quick view.